In this video, I'm going to show you a smart money trading strategy that can truly make you consistently profitable trader. Also, you see step by step how to implement that strategy along with the live trading proof that I have traded with hundreds of traders on YouTube live trading session. In addition, also you can see the tools that can be used to identify the smart money trading zone and also the smart money trading area, that is the liquidity candle. This is a live trade using this smart money trading strategy. Now in this trade on GBP JPY, the single trade has given 126 pip using this same strategy. Also, the same trade has been shared in the VIP community where other traders are trading in the academy with entry, stop loss, take profit target. Now the same trade now today I will be breaking down how the strategy applied and how you can take the full advantage from this strategy. This strategy can be applied to any currency pairs including gold or any other instrument. Now you can see this is also on gold on 15-minute chart. The strategy applied with this tool that is showing exactly how to identify those liquidity zone or the smart money area. So now I'm going to explain step by step how you can implement in your trading. Now before I progress further, make sure you smash the like button and also hit that subscribe button if you haven't done yet. So without further delay, let's get started. Okay, traders. So to implement the strategy, the first step is to identify a key smart money zone. That is that smart money were interested to buy or sell in the past from the same level, which is an order block. So an order block is where the smart money started to buy or sell or have a very high interest to go long or short. Now you can see this is where the key level of resistance, where the smart money were interested to sell the market, and because of that we have seen a very strong drop from this level. Once you can identify that order block, now is it easy to identify the order block? Very simple. Once you see a level that has a high reaction and a very strong reaction, which is an important area. Now also, how do you identify a very high reaction zone? Very simple. Also, you need to look at the impulse. Now if you look at the chart, what you can see from this level, see how the market reacted to that level, which is very identical. If you look at the past and recent chart, you won't find any better reaction than this one. Now once you identified that order block, the next step is to find an overextension and then reversal. Now it is important that to understand that overextension, as this is where the liquidity grab. As in the past, this level where the area of value where the sellers were interested to sell, passing that zone can lead high liquidity trigger. The reason is, as in the past, the sellers were interested to sell, in the present moment when the price is in that level, also the seller will be interested to sell and the impatient trader get stopped out earlier. Now if you look at that zone where there is a high liquidity, this is where the market prepare for a bigger drop. And by understanding this, you can make your trading decision better, that as the market has passed by that previous liquidity zone and forming a head and shoulder what you can see in this trade that is made winner that you can see, which is around 3.5 times, almost 126 pip from this single trade. Now the difference between a retail trader and a smart money trader is that the retail trader trade from the level. That means that when the price hitting that zone where there was an order block, retail trader might get in a sell, while the smart money manipulate that area to trigger those stop loss before it turns in the direction. So therefore, as a retail trader, it is important that always wait for the smart money to take steps in the market and then following their footstep to find the biggest trade possible in the market. Now I know that it's easier said than to done, and to make that task easier, let's jump on to another trade that we have taken also in this live market on YouTube Live with hundreds of traders. Now this is another liquidity candle. If you look at this area where there is a high liquidity, this 15-minute chart on gold, this liquidity candle is formed exactly where the market became overextended. Now this liquidity candle has formed exactly where the market became overextended, grabbed that massive amount of liquidity, and during that news trading we have seen that candle to be developed, and the market made its biggest move towards the upside from this level, and we have secured 40 pip profit from this trade in this live market. Now if you look at this nature of this candle formation, you can see that this is where the smart money traded. Now the question comes in, how do you know that smart money traded from this level? Well, the only way you can know is to see how the candle formation and how the market reacted to that support level. Now if you probably can see that liquidity candle with an arrow, the tools that also can help you to identify those liquidity candle and the smart money trading system. Now you might ask another question, is the smart money trading only from one zone in a trending market? Not at all. Smart money will get in the market whenever the price in their level. Now if you look at again the whole trending direction, you can see that there is a liquidity candle formation here. We can see that move happen to this level, followed by we can see another back-to-back massive two liquidity candle formation, and both of them also the smart money trading zone. Here you can see that the market crossed that low, grabbed that liquidity, made another bounce followed by another doji. There is another massive liquidity candle formation. So when the smart money started to trade, they find those zones, those levels where there is a high liquidity, and they get in the trade. Now as a retail trader, the only way you can catch this kind of bigger move is to trade with the smart money. By understanding this concept, also it becomes much easier for you to get in the trade when the smart money coming in the market. So to recap what we have learned so far, let's jump onto a diagram and understand it, how the smart money trades and how you can trade based on smart money. This simple diagram can help you to understand the overall concept of smart money. You can see that this is an order block where the sellers were interested to sell and the market made a drop, followed by a stronger impulse. That means that previous supply area turned into a demand area. And from the demand area, we saw that the smart money started to buy. And when the market come down for a pullback, which is basically profit taking, and When there is a profit taking, again there is buying happen and the market started to move until we see that the market structure is broken. Now, as a smart money trader, the best way to trade is to wait for the break of a structure. Because when there is a break of a structure where there is high liquidity, because this is where the impatient trader stopped out. There are two ways that break of a structure can give you high probability trade setup. Once the break of a structure happen, a lot of buyers, for example in this market, hit their stop loss, so that turn into sell position. Also, a lot of new buyers coming in the market that give you a higher momentum for further movement to the upside. So this is the core concept of smart money trading. And to enter the smart money trade, the best way is to wait for the price to break that key levels of order block and then restart its previous directional bias. I strongly believe that traders, you understood now how to apply the smart money strategy, how to find out the trade that is based on the smart money, and how you can implement that strategy. So with that in mind, thank you for watching this important lesson. Let us know using the comment section what kind of content you want to see in our next lesson. With that said, thank you very much. We'll see you soon trading live together.